Hello, and thank you for joining us for another episode of This Week in AML. I'm John Byrne, Chair of the AMLRS Advisory Board.
And I'm Elliot Berman, our Creative Director. We are excited to welcome you to the This Week in AML podcast,
where we explore key news and developments in the global financial crime prevention community.
Hi, John. How are you today?
Good, Elliot. How you doing today as well?
I'm doing well. It's a beautiful day here in Milwaukee, and here to talk with you about the latest thing coming out of FinCEN, which is a statement on Bank Secrecy Act due diligence for independent ATM owners or operators. Did you see that?
Gee, I thought we were going to talk about the NBA draft, but I guess we'll do this instead. Yeah, I did see that.
We'd probably have to do the NBA draft later since they haven't started yet. But
well, I know our predictions though.
Oh, our predictions. Okay.
Are the Knicks going to move up? I mean, it's important. So anyway, yeah, I did see that, and I had a couple of quick thoughts, and then obviously want to hear yours. One is working as closely as I have with not NGOs over the course of the past half decade, trying to ensure that they're not automatically de-risked for just fear of not being able to mitigate risk. It was pretty interesting, maybe even ironic, of a strong statement from FinCEN on independent ATM owners because of the same issue apparently that they deal with, that institutions who have been told, and I would argue correctly, that many independent ATMs do present some version of risk higher than others, that there needs to be a more careful due diligence so that some of these entities, don't have problems getting banking relationships. So the fact that they put this statement out is, again, pretty interesting, to say the least. It
did strike me as I was reading it. It was like, why this and why now? I know you follow some of the hearings and things like that in Washington more closely than I do, but it felt like it was in part the result of maybe some lobbying effort that then moved this up the urgency list at FinCEN, because they have a huge list of things on their plates, as we know, many sets of regulations and notices of proposed rulemaking that are pending, and all of that coming out of AMLA. And this one just felt like it was a little out of the blue in terms of its magnitude. There's certainly a tieback appropriately to the 2016 CDD rule and things like that, and an emphasis on the risk-based approach and things like that, which I agree with conceptually. I thought it was very interesting. There's a sentence in here, or at least a phrase, that I think is maybe not how it comes out on the ground. And it was about taking a risk-based approach. And it says, no specific customer type, including independent ATM owners and operators, automatically presents a higher risk of MLTF or other illicit financial activity. And I thought, well, that's kind of interesting, because I am sure that some of our colleagues who are in financial institutions have experienced a different view during the examination process over the last many, many years. So it's good to hear that statement made, but I wonder how well it translates to the ground.
And a couple things again about the irony of this particular statement. If you look at some toward the end of the statement, they talk about some of the information gathering that might be useful, and there's a series of bullet points, but one of them is the location where the independent ATM owner is organized and where they maintain their place of business, including locations of owned or operated ATMs. Okay, but part of the reason for doing this statement is to make sure that people that need banking services get them. Well, then, if that's true, that people should get banking services, which I don't dispute, won't there be the potential, if you look at location and you look at areas that maybe they're in HIDAs or HIFCAs, whatever it might be, that where they actually do need banking services, that then becomes a high risk flag. So it's a little bit counterintuitive, at least that bullet point, I think, if that's going to give you a level of comfort. So I find that a little strange as well.
Yeah. Again, a lot of the comments or statement, tracks the CDD rule, talks about the way to, the same kinds of information that we've heard appropriately, again, about how to make risk assessment or risk determinations and things like that. But as we've each said, it just seems a little strange. It's definitely one of those businesses that's a little challenging. I mean, in some cases, it makes a lot of sense. Where you find these machines and these services being provided, and they do fill gaps, as you just pointed out, in the geographies where banking services or access to funds are available. But there's something in here that just felt kind of odd.
Yeah, and I mentioned the nonprofits. I actually sent this along to a colleague that I've worked with on some of these projects, and the response from the colleague was that this particular sentence, that the CDD rule does not require banks to conduct additional due diligence to independent ATM owners. She said, I don't recall seeing anything like that for nonprofits, which not wrong. So again, I think that was also telling. Another colleague of ours that we've worked with was watching the earlier FinCEN hearings, I think on appropriations. I can't remember exactly what, a few weeks ago. And there was a lot of comments from some of the members about independent ATM owners, like a very strange high level of comments about that just seemed to be a result of what I would argue has been, as we've said, heavy lobbying from that group. And actually I testified before I joined RightSource at a hearing on AML related topics, probably like 5 years ago, maybe even longer. And a separate panel from the one I was on was independent ATM owners complaining back then that they're not high risk. They're basically, being a little facetious here, mom and apple pie. And that why is it that they're having struggles getting bank relationships, or having to provide additional information that they weren't prepared for, The other thing I would highlight is, again, going back to a colleague of ours that's written about this, and in one of her postings says, remember, ATMs are not regulated. And so there's no requirements for stringent CDD measures, but it's also quite easy to buy one online and establish an ACH connection through various unregulated ISOs, and then you get an ATM. So there are some folks that have been looking at this. So going back to our original thought, really interesting that FinCEN decided to issue this. And I would say one other thing, and I know this isn't part of what we're talking about today, but I also separately, we've been working on, and we've commented before about the fact that now antiquities dealers and advisors will be covered under the Bank Secrecy Act. I just saw something that indicates that the notice of proposed rulemaking will not be even issued until January of 2023 because of all the work that FinCEN has on its plate, which it does. But I would ask, why are we doing this? I mean, I know it doesn't take that long to put a statement together, but let's talk priorities here. So I think there's a lot of questions that this raises from my perspective.
Yeah, agreed. So we're recording this on Thursday. Later today, our latest webinar is going to be done on customer risk rating models. So I would urge people to watch for clips of that to post to our website starting in early July. And I know you've got at least a couple things in the pipeline. Anything you'd like to talk about?
Sure. We just posted a blog that I wrote based on the June plenary outcomes. So that's out on our website and out on social media. Also, there's a couple of interviews that we are scheduling. I don't want to announce them yet until they're done, but some more that have international focus and flavor. One that will be with a fintech related company to get their sense of their challenges. So that's coming up as well. I guess going back to the statement again, the one thing I will say that is positive is the reiteration of the importance of a risk-based approach. So I think we shouldn't get away from the fact that we need FinCEN and the regulators to continue to talk about any risk mitigation should be done through risk-based assessments. And as long as the examiners follow suit and look at institutions for doing it that way, it's hard to quibble. So risk-based, of course, means looking at a series of factors before you make a decision. But I would also say it also references that if something is considered in a high-risk bucket, the institution still, at the end of the day, has to make a tough call. Do we process? Do we onboard? Do we exit based on our ability, our perceived ability, and the regulatory view of our ability to mitigate risk? So risk-based is important. Let's continue to hope that our regulatory partners utilize that when they look at our clients and the customers of our clients.
Agreed. So, excuse me, you have a great weekend, and I will talk with you next week on some new topic that I'm sure will become clear between now and then.
Sounds good, Elliot, and enjoy the rest of your birthday. Take care.
Thank you very much. Bye-bye.